Now let's turn to the UK. The best thing that ever happened to the United Kingdom is that we did not join the euro. I think most of the people in this room would agree with that. We have a relatively flexible, albeit an economy that's going to be more highly taxed in the future, as I discussed last year. We've got a consumer-driven economy, but the pound remains overvalued. Now, when I was a child, I used to look at my dad's newspaper, and every day we headlines, "Trade deficit swells to record levels." I'm sure many of you remember that. "Crisis, Lawson has to go here," or "Dennis Healey has to go there," because of the trade deficit and our inability to pay for the excess goods that we were buying compared to those that we were selling overseas. Today, we have a record trade deficit in the US as a percentage of GDP. It's somewhere around 5.5%. It's the highest in the developed world. Sooner or later, that's got to be compensated for by either a decline in our currency or by a massive inflow of foreign direct investment into the United Kingdom. The foreign direct investment isn't really coming at the pace that it used to come, so the currency's got to go down. So today, the pound is around 168 to the US dollar, and I think realistically, it's worth about 150. So I'm not outright short the British pound. I think it's a dangerous game to play, but I would say that if you're considering overseas investments, you're likely to make a dollar gain or a pound gain in those because of the conversion back into sterling. As far as the stock market is concerned, I think the stock market in the UK is much better valued than that of the United States, and I'll get to that in a second. However, there are some exogenous factors. My friends from Scotland have come down very kindly to visit and listen today, but the next time they come, they may need passports to come to the UK because we just don't know who's going to win the election in September. We also have an election coming up in May of next year, and my general forecast is that Miliband will get back in, and that cannot be good for those of us who are savers and those of us who are entrepreneurs, because there will be more taxation in this country, particularly for reasons I'll get into in just a second. So the UK, in terms of its stock market, its dividend yield is higher. We do not have the crazy share-back programs that the United States has, and the PE ratio in the UK is okay by historical standards. It's not outright cheap, but I think a well-diversified UK portfolio will outperform, on balance, a well-diversified, and by diversification, I don't mean the sort of diversification that huge funds engage in. I mean the sort of 25 stocks that Terry was talking about earlier, will outperform a portfolio that's similarly constructed for the United States.